Welcome to the Runway, where we cover current events in crypto, Web3, and tech. Today's Runway covers the Chinese money printer starting up again, the US Treasury grasping for more power, regulatory warnings to Binance in the Philippines, Genesis and DCG's lawsuit resolution, as well as FTX claim distributions and transfers, Wormhole's $225 million fundraise, Pizza Hut's intro to Web3, and some AI progress and Twitter takes. It's Thursday, November 30th. Let's take off. China is throwing gas on raging crypto bull market. Former BitMEX CEO Arthur Hayes says China seems to be prepping up to infuse the economy with overflowing credit, thereby pushing Bitcoin and thus broader cryptocurrency industry higher. Hayes says that the US and China are friends again, and with this, the Chinese money printer will go burr. Let's take a look at how the Middle Kingdom is about to throw gasoline on the raging fire that is the incipient crypto bull market. Hayes highlights how the U.S. monetary policy will cushion more favorable conditions for Chinese authorities for issuing significant amounts of yuan credit into the Asian country's struggling property sector. Beijing has only one way out to open the doors of credit into the economy, which is through bailing out property developers. Conditions may be created where the yuan will strengthen and the dollar will weaken, he adds. This gives China the wiggle room to dramatically increase the amount of onshore yuan credit without the currency weakening. This global monetary change may benefit the crypto sector because if China prints yuan, then it will make its way into the global markets and support the prices of all types of risk assets. Hong Kong and is China's window to the global capital markets, and it has some fully licensed crypto exchanges and brokers where Bitcoin can be purchased. Hayes says that to move cash legally from the mainland to Hong Kong, Bitcoin will be one of the many risk assets that will be purchased. Subsequently, with yuan credit overflowing, demand for dollar credit and liquidity will drop. He adds, given that the dollar is the world's largest funding currency, if the price of credit falls, all fixed supply assets like Bitcoin and gold will rise in dollar fiat price terms. In its third quarter monetary policy report, the People's Bank of China states that there is a changing structure of lending and observers should look beyond new loan volume. He says that there is no better place to be than in Asia when China is in bull market mode. I will continue moving money out of T-bills and into crypto because I want to get in now before it becomes apparent through the data that China's money printer is going burr. I actually really like the take that Arthur is bringing up here. And I think it goes in line with something we talked about last week, which was Rom's Twitter take, where he kind of discussed sort of almost a contrarian viewpoint about the U.S. They don't want any war in Taiwan. They don't want any trouble there. And it was a very symbolic sort of trip. This is a positive development. And I think with China's economy, they were kind of almost bending the knee. The data was looking very, very bleak. You're seeing a lot of cracks, and you're seeing a sort of a reconciliation here, and sort of going back to the status quo over the past couple decades, I think. If the money printer starts going burr again, money flows into more assets that are sort of considered farther out on the innovation and risk curve, right? And crypto is absolutely one of those assets currently. Next up, U.S. Treasury campaigning for amplified powers to chase crypto overseas. A top official has asked members of Congress for new laws to extend the Treasury's crypto reach beyond its existing enforcement and sanctions abilities. They want more power. One of the government's requests is for special jurisdiction over non-U.S. stablecoin issuers such as Tether. The U.S. Department of the Treasury is pressing lawmakers for a new set of powers that would give the government unprecedented enforcement and sanctions authority over the crypto sector, including the ability to roam well beyond American borders and get involved with transactions that don't involve its citizenry. Deputy Secretary of the Treasury Wally Adeyemo has lobbied senior members of Congress with a proposal mapped out in writing that he calls a set of common sense recommendations to expand our authorities and broaden our tools and resources to go after illicit actors in the digital asset space, according to excerpts from a speech he's set to deliver on Wednesday in Washington. It's common sense for us to go interfere in other countries' affairs and, get involved in stuff that has nothing to do with our citizens in our country. This is a little microcosm of just how the U.S. has approached the world over the past, few decades. And I think it's time for us to not be the world police and meddle in every single affair, especially in other jurisdictions where, they may not feel the same way and they may want to conduct their business differently. I think we should, obviously have certain rules and regulations that the people of our country choose to elect and abide by and vote for and governed. But other countries should be governed how they see fit. And I don't think the government needs any more power to go interfere in foreign affairs with foreign citizens. And that has absolutely nothing at all to do with the United States. Next up, Philippine security regulator warns Binance is operating without a license. Where have we heard this before? The Philippine Securities and Exchange Commission is warning users in the country that it may soon block access to Binance as the exchange is operating without a license in the country. In a notice, the regulator said that Binance is not authorized to sell or to offer securities to the public. The regulator also said Binance is actively promoting crypto trading to Filipinos on social media, an offense in the country that may have criminal liability for the promoter. Those who act as salesmen, brokers, dealers, or agents, representatives, promoters, recruiters, influencers, endorsers, and enablers of Binance in selling or convincing people to invest in its platform within the Philippines, even through online means, may be held criminally liable under Section 28 of the Securities Regulation Code, it said in the notice. Warning of fines of 5 million pesos or up to 21 years in jail. The regulator is also seeking the assistance of the National Telecommunications Commission to block Binance in the country, and it has ordered Google and Meta to block local ads from Binance. This block, if approved, will take place in 3 months, allowing local users to liquidate and withdraw their positions. Local media in the Philippines published a response from Binance where the exchange said it was committed to aligning with applicable local regulations. Under our new leadership, we have taken proactive steps to address the SEC's concerns. Authorities agreeing to pay $4.3 billion in fines on charges that it failed to maintain a proper anti-money laundering program, operating an unlicensed money transmitting business, and violated sanctions law. This sounds very familiar to what's going on in the U.S. with the SEC, and it looks like the Philippines security regulators may have seen this $4.3 billion shakedown, and it seems like they want to get in on the action. There will probably be some settlement resulting from this, and it looks like the Philippines are going to get their piece of they're going to strike while the iron's hot and try to get their pound of flesh from Binance. Next up, Genesis strikes repayment deal with parent firm DCG to end $620 million lawsuit. Genesis and Digital Currency Group came to a deal to end a lawsuit seeking repayments of $620 million from DCG. Digital Currency Group has over $320 million left to repay, according to Genesis, and the deal would see that remaining sum repaid by April 2024. Bankrupt crypto lender Genesis and its parent company Digital Currency Group have struck a deal that could end an ongoing lawsuit to claw back $620 million in payments from DCG. In a November 28th filing to the United States Bankruptcy Court for the Southern District of New York, Genesis said DCG agreed to pay its outstanding $324 million in loans by April 2024, with Genesis allowed to chase up on any unpaid amounts. The proposed deal aims to allow Genesis to end a lawsuit filed against DCG in September that sought to have the firm repay overdue loans worth around $620 million. DCG has made some payments since the suit. This looks like a lot of theater to me. The parent company suing the subsidiary company, and from my understanding, these initial loans that were done with like almost no interest, and this was kind of like the right hand scratching the left hand, and the left hand scratching the right hand. Seems a little bit suspect, a little sus. I think it's a little strange, all of this. Now they got a deal, they're suing each other, but they're the same company, and very strange. Next up, court approves FTX estate's sale of $870 million in Grayscale and Bitwise shares amid surging claim transfers. The Delaware District U.S. Bankruptcy Court has greenlit the FTX estate's disposal of trust assets. This sanction, issued on November 29, 2023, paves the way for the beleaguered crypto exchange to offload investments in several funds, including Grayscale and Bitwise stakes. Furthermore, the FTX Trading Ltd. record, maintained by restructuring entity Kroll, is swamped with the assignment of claims to new holders as creditors opt to trade their claims for immediate financial gain. FTX granted approval to sell trust shares, so it looks like FTX will be slowly liquidating, some of these stocks and positions and I guess holdings that they had on their balance sheet to pay out creditors. It looks like the courts have the judicial order sort of approves that dissolution, which is probably for the best here. Let the people get their money back. But the interesting part about all this is this idea of these reassignment of claims. So it looks like there is this company called Cherokee Acquisition, and they are sort of going to all of the individuals who are owed from the FTX estate, and they're sensing some sort of blood in the water here and an opportunity to make a quick buck. And these people need money immediately. They are sort of buying out the claims because it looks like FTX is probably going to end up with more money than they expected because some of the investments have gone up and the values of the market's coming back a little bit. So this firm, Cherokee Acquisition, has come in and they sort of are giving people cash immediately. Like right now, hey, I know your claim in 8 months might be worth, $100,000. I know initially you had $150,000, but you're going to get 100 of it back. But hey, if you take this 70,000 right now, you won't have to wait 8 months or potentially longer. So that's what Cherokee acquisition. It seems like that's what they do. They specialize in the acquisition of claims and bankruptcy. Which is kind of interesting. It's an interesting market here, right? So it serves a real purpose, right? It's a free market, and people might want that money right now. They might desperately need that money, and a company that has a bunch of capital might be able to wait out the process and take the risk. They're sort of gambling, or they're using taking a calculated risk to buy these claims, thinking that eventually, when everything does settle and they do get paid out, they're going to get more than what they paid, right? So there's a risk there, and it's kind of an interesting little niche market. Next up, Wormhole raises $225 million at a $2.5 billion valuation. The team behind Wormhole, the messaging protocol that lets developers communicate across different blockchains, has secured a mammoth raise. There was some bridge hacks and some stuff going on with Wormhole where they got hacked, and I know they were backed initially by Jump Crypto. But it looks like they are recovering, and they're still putting out good code, and they've retained developers, and they're growing, and they're shipping better products. So it looks like they are continuing to raise. This is a pretty big raise in the market, this market cycle, with the market sort of rallying a little bit, and sort of retracing off of the lows. We're going to see some sort of renewed interest in the crypto markets and VC interest. Sofi shuts crypto services. Here's what customers need to know. Sofi is a sort of a investment company, checking like sort of digital banking services company, and they are now sort of shutting down their crypto service. I wonder what's going on here and why they would do such a thing. Sofi Technologies is shutting down its cryptocurrency services by December 19th. The existing users can either opt in to have their accounts transferred to privately held blockchain.com or have their accounts automatically closed. For users cashing out for a profit, the sale could trigger a tax implication. In some states where blockchain.com does not provide services, users will have to sign up with its partner, Backed Crypto Solutions. Users in New York will not be eligible for the migration and will need to sell or have their accounts liquidated. Existing accounts will have the choice to migrate to blockchain.com platform or be closed and liquidated at this time, with a few caveats. This really doesn't make a lot of sense, and especially with the market sentiment coming back and probably more users. And I think SoFi has their name on the Los Angeles Rams and Chargers stadium that they share. It's so-called SoFi Stadium. They would sort of get out of an industry that's emerging and continuing to grow from market cycle to market cycle. But when we dig a little bit deeper, we see why, in fact, that they're doing this. So why did SoFi wind down crypto operations? SoFi's exit from the crypto business has been planned over the past 2 years. The company received a conditional approval from the Office of the Comptroller of the Currency, OCC, to operate as a bank holding company in January 2022. That approval hinged on SoFi not engaging in any crypto-related activities or services without approval from the OCC, the company said in a filing dated September 2022. Again, we have, the OCC largely responsible for Choke Point 2.0. This largely seems unconstitutional to be telling companies they need approval for illegal and lawful activities in order to do certain things. So definitely seems prejudiced and biased. I would be surprised if this wasn't completely unconstitutional. But basically, they told them they can't operate as a crypto business. Totally unconstitutional in my opinion, and I guess we'll see what happens here. I mean, I don't know if SoFi's obviously winding down their business and accepting it. Maybe crypto is a very small part of their business, but just a little caveat. The current market with the current administration has been, terrible for our industry, and they've been doing a lot of unconstitutional, in my opinion, attacks behind the scenes, whether it be the SEC, who've been doing it blatantly, overzealous regulators like the FTC. Look at what the U.S. Treasury wants. They want more control, more power, more authoritarian power to meddle in other countries and meddle in other people's citizens who are not even United States citizens. They want to use our tax dollars to go after those people because if they don't approve of what they're doing, with engaging with crypto or whatever it may be. And now you have the OCC putting pressure on behind the scenes. I know that Caitlin Long has sort of really called them out, and so has Nick Carter. He's done a great job sort of exposing the total unconstitutional behavior. But hopefully, the only way to make change is to vote these people out. But hopefully, we can get some resolution here, and we can get back to being the most innovative country in the world, and supporting our tech industries and our industries that are going to produce trillions of revenue and many jobs over the coming decades, right? So let's move on to our next story. Pizza Hut's move from Web 2 to Web 3 made it a big cheese in the metaverse. Pizza Hut and Spark Foundry have won Best Brand Experience of the Year at the Drum Awards for Metaverse. Learn from the award-winning case study. So it's a pretty interesting, cool little story here. It looks like Pizza Hut this is their first foray into Web 3. Pizza Hut aimed to create a meaningful presence in the metaverse and Web 3 space by partnering with End of the World to develop a limited edition collection of NFTs. The goal was to tap into existing Web3 culture, leverage EOWP's engaged community, and drive buzz among Web3 enthusiasts. Instead of merely creating a virtual Pizza Hut restaurant, Pizza Hut focused on extending its Web2 strategy into the metaverse. The strategy centered around joining cultural moments, enhancing experiences, and providing utility to consumers. Pizza Hut chose to collaborate with EOWP, a project with an active Discord server, engaged Twitter following, and a storyline for natural integration. Let's see here. So, it looks like they're exclusive rewards. Each NFT came with standard EOWP rewards, including an AR comic book, an AR t-shirt, additional free NFT airdrop, memberships to the exclusive community, and extra entries and giveaways. Pizza Hut added rewards such as free Pizza Hut for a year and Pizza Hut prizing for community challenges. Very cool. Very cool. What I really would love to see, especially for some of these initial NFT collections, I feel like there's so much potential here to essentially do like, hey, if you own one of these NFTs, you get 10% off on any Pizza Hut purchase or order for life, right? And there's a certain set number of those NFTs, right? Where maybe the rarest ones get 20% off for life, and it kind of just if it demonstrates, hey, like loyalty to the brand, it builds loyalty. I'd love to see some stuff like that from some of these NFT companies with some of these exclusive NFTs that can be verifiably proven scarce on the blockchain, right? Use that sort of scarcity to give your biggest customers sort of this beautiful incentive, right? So hopefully we'll see some more of that, and I think we will as time goes on. Some more creative NFT economics in some of these interesting projects, right? Next up, researchers made an IQ test for AI, found they're all pretty stupid. Artificial intelligence programs still struggle with basic problem-solving skills that people excel at, new research claims. There's been a lot of talk about AGI lately, artificial general intelligence, the much coveted AI development goal that every company in Silicon Valley is currently racing to achieve. AGI refers to a hypothetical point in the future when AI algorithms will be able to do most of the jobs that humans currently do. According to this theory of events, the emergence of AGI will bring about fundamental changes in society, ushering in a post-work world, wherein humans can sit around enjoying themselves while robots do much of the heavy lifting. If you believe the headlines, OpenAI's recent Palace intrigue may have been partially inspired by a breakthrough in AGI, the so-called Q program, which sources close to the startup claim was responsible for the power struggle. But according to the recent research from Yann LeCun, Meta's top AI scientist, artificial intelligence isn't going to be general purpose anytime soon. Indeed, in a recently released paper, LeCun argues that AI is still much dumber than humans in the ways that matter most. So this article is largely a little bit of a contrarian take, maybe pumping the brakes on all of the hype and the excitement that maybe AGI is not quite going to be here so soon, right? And we spoke a little bit about the Q program the other day, and kind of that it was really good at solving mathematical problems in the sense that the reasoning framework of the model was very, very intriguing and quite a breakthrough, right? So I think we're going to still see some breakthroughs, but there are some different takes in the space, and in different AI researchers and scientists feel differently. And I think for the past 60 years, there's kind of been this buzz that AGI is right around the corner, right? It's going to be here, in the next 5 years, in the next decade, right? But a lot of brakes have been pumped on that. But we'll see over the next few years if how close we really are, right? It's this interesting time, and we're not slowing down. Technology is accelerating, and eventually we will get there, regardless, in my opinion. But in the meantime, let's move on to our next story, which is also very interesting. And although we may not see general intelligence just yet, there are some pretty interesting breakthroughs every day occurring with the help of these large language models and these AI models. So this story, Google's DeepMindes AI dreamed up 380,000 new materials. The next challenge is making them. Google DeepMind researchers say they've expanded the number of known stable materials tenfold. Some could be useful for everything from batteries to superconductors if they make it out of the lab. The robotic line cooks were deep in their recipe, toiling away in a room tightly packed with equipment. In one corner, an articulated arm selected and mixed ingredients, while another slid back and forth on a fixed track working the ovens. A third was on plating duty, carefully shaking the contents of a crucible on a dish. Gerbrand Cedar, a material scientist at Lawrence Berkeley National Lab in UC Berkeley, nodded approvingly as a robotic arm delicately pinched and capped an empty plastic vial. An especially tricky task, and one of his favorites to observe. These guys can work all night, Cedar said, giving two of his grad students a wry look. So this is kind of an article here about all of these different materials, whether it be solar panels or different types of materials that would greatly benefit different industries. And these large language models are sort of using inference and creating different thought-provoking inventions or ideas that can be tested. And these things can be sort of tested and potentially created in laboratories, and they might make the world more efficient and better and improve costs and efficiency. And this is in all areas, right? This is across the board. So let's move on to our next story here, which is another sort of extension of this. AI technology could soon save lives at the beach. Here's how. Research uses machine learning technology to help identify rip currents. Your trip to the beach could someday be a lot safer thanks to artificial intelligence. Researchers at the University of California, Santa Cruz, led by Professor Alex Pang, are developing potentially life-saving AI algorithms geared toward detecting and monitoring potential dangers along the shoreline. The life-saving technology could also alert lifeguards of potential hazards and detect rip currents or riptides, which, according to water resource rescues and safety expert Jerry Dworkin, account for 80% of ocean lifeguard interventions. So, just the tip of the iceberg here, right? AI is going to, it's already making waves with the meteorological stuff and redesigning solar panels and new materials and helping lifeguards, sort of looking at water flows close to the shoreline that could potentially kill people and drag them out to sea, right? So we're going to continue to see a lot of life improvements with AI in the short term, well before we reach AGI. All right, let's wrap up with some interesting Twitter reads and Twitter takes. This is Nick Carter on a concept called MEV. So what MEV stands for is minor extractable value. And, another way to think about MEV would be in a similar, if you're thinking about the stock market, would be like high frequency trading, right? So the ability for somebody to essentially front run a trade and then because they see the data out there, the fact that this trade is somebody submitting this trade, well, they front run that trade, buy it, and then sell it at a slightly higher price, make a small commission there, right? That's one example of MEV, right? But there are also other examples of MEV. MEV could also be positive. It could be a positive or a useful thing. Say, for example, somebody put a trade in to buy something, say on Ethereum, and if you were able to find a better execution or a better fill price for that order, you more efficiently, you could essentially go to a different liquidity pool, grab that coin that they want to buy or that token or whatever they're looking at, and essentially sell it to them for a better price, right? You're sort of, and you take a fee for that as well. So not all MEV is bad, and also not all MEV is good, but MEV is, and as Nick says here, the availability of MEV correlates with the richness of state. The view that there would never be MEV on Bitcoin was bound to die as Bitcoin found semantically interesting usage. It's not just an ETH problem, it's an inherent feature of permissionless validation in a richly stateful system. Bitcoiners might complain, but BTC MEV is a sign that the protocol is growing up. Interesting take, and I saw a conversation the other day about, privacy blockchains and, if you can't see the transactions and if you can't see this stuff, is there still MEV, right? And the answer to that question is yes, there is still MEV, even in privacy preserving blockchains where the outside observers can't really see all the transactions. Each block, the first, transaction in each block is still always going to be valuable. So MEV, although to a lesser extent, will still exist even on privacy chains. Let's move to our next take. Dylan Leclerc, talk of ETF approval misses the forest for the trees. It's not just about immediate reactions or flows. It's about the recognition of BTC as an institutional asset. Pensions, endowments, insurance investment portfolios, etc. will soon be entering the arena with passive buy-side flows for the long term. In December 2020, MassMutual invested $100 million into Bitcoin. Massive, except not really. MassMutual manages $235 billion in assets with long-dated fiat liabilities. $100 million of Bitcoin is a 0.05% allocation. Large institutional investors don't purchase something to flip it the next month. They are constructing portfolios for multiple decades. So here's an idea of just looking at how a portfolio gets, passively allocated and what they buy and how they sort of hold these assets for a long term. They're just constantly passively allocating. At 0.05%, allocation is just the start. There are many more MassMutuals out there, and all of these allocators are staring at their bond portfolio, which is down 50% from all-time highs, questioning previous assumptions they held. The endorsement by the likes of Larry Fink isn't a sign that Larry is suddenly a Bitcoin bull. It's a sign that clients are knocking on BlackRock's door, asking for a vehicle to gain exposure. The narrative violations are strong. Passive accumulation starting from the $69,000 all-time high has you plus 45% right now on your Bitcoin position. The same passive allocation into long bonds has you negative 12%. But the volatility, again, it's a misunderstanding of time horizon. A 1% allocation to an asset that they don't plan to liquidate for years, decades, with an extremely strong Sharpe ratio is within their risk profile. If you want proof, just look at the rest of their portfolio. No, the orange coin is not going away. No, it did not die when FTX collapsed. Yes, supply is more tightly held than ever before. Yes, perpetual credit expansion of the fiat monetary system is an ongoing reality. No, there is no sense of fiscal austerity present anywhere. Yes, this illiquidity means marginal flows into the market sends the price higher, which is why all of these institutions will start with a tiny 0.05% stake while continuing to passively allocate and steadily for the long term. Reinforcing this all is the shift in narrative and negative bias around energy usage and mining, evidenced by new academic papers on mining as a tool for balancing the grid and monetizing waste energy. Here's a link to a couple of those things. A couple of them we looked at the other day. The landscape and profile of the asset has shifted. It's not about the ETF. It's about the reason why the ETF is coming. Institutional exposure has been given a green light. It won't happen all at once, but understand the shift that is underway. Bitcoin has been passively accumulated by individuals and retail for some time now, while institutions mostly watched the madness from the sideline. This is changing. Welcome. Wow, that is a fantastic tweet that really sort of encapsulates the big picture power shift and the big picture macro play that's occurring here. And we are going to see this passive buy pressure on Bitcoin as a macro asset, just as it's sort of accumulated to 1% in different portfolios. And we're talking trillions and trillions and trillions of dollars of passive buy pressure over the next decade. Here's another post. Another Twitter take, which I thought was interesting. We all know that the government is gaslighting us with the bullshit 3.2% CPI and 4% core CPI readings. The real numbers look more like the ones in the image below. Satoshi created Bitcoin in the form of digital gold to solve the problem of inflation. Inflation allows the cantillionaires to rob 8 billion people of their life's energy. It is the single biggest problem on the planet. Everything else in crypto is a sideshow. Stay focused. This is the issue. Putting an end to this is what the Bitcoin revolution is all about. And here we have an interesting image kind of showing the cost of a lot of goods that have sort of really gone up, really important ones like gas, car insurance, used cars, restaurant food, groceries, pets, water, sewage, indoor plants, electricity is up 25%. In the bottom corner here, we have rent, right? So rent is up 20%. I mean, these are lasting effects from basically all the money printing that occurred. And, this isn't going away. And this puts a strain on the poorest people, right? So this is what we discussed yesterday, what Milei in Argentina was talking about on that short clip, discussing the Cantillon effect, right? Where, the people who get the money last are the ones who are affected the worst. And the people who get the money first can buy all the stuff before the prices have readjusted, right? Next up, interesting post by Bitcoin Magazine. I pulled this up yesterday. And breaking, President of Colombia met with Samson Mao in Jan 3 to discuss how Colombia can adopt Bitcoin. We're seeing a lot of attention in South America on Bitcoin. And I think that a lot of countries there over the years have had hyperinflating currencies, from Argentina to Venezuela, where, these currencies have failed multiple times throughout people's lives, right? So people are looking for something different, and people are learning about Bitcoin. And I think we're going to see a strong, play in areas of Africa still, and in areas in South America first. They're going to be some of the first adopters of Bitcoin as a means of payment and as a store of wealth, and all of these different value props that Bitcoin sort of provides, right? This absolute mathematical scarcity sort of baked into the protocol that prevents the debasement of the currency by different governments and people who are intent on abusing their power. And finally, for the day, speaking about abusing their power, this is very chilling. More documents have come out. Let me see if I can pull back here and look at these files. Let's see. Here we got the CTIL files number 1. U.S. and UK military contractors created sweeping plans for global censorship in 2018. New document shows. Whistleblowers make troves of new documents available to public and racket, showing the birth of the censorship industrial complex in reaction to Brexit and Trump election in 2016. So the powers to be were not happy about losing their power, not happy about people deciding to leave via Brexit, and also not happy that an outsider to the political system was elected, Trump. Very, very chilling files and very, very chilling read-throughs. One of the many chilling paragraphs right here. TERP's view of disinformation was overtly political. Most misinformation is actually true, noted TERP in the 2019 podcast, but set in the wrong context. TERP is an eloquent explainer of the strategy of using anti-disinformation efforts to conduct influence operations. You're not trying to get people to believe lies most of the time. Most of the time, you're trying to change their belief sets. And in fact, really deeper than that, you're trying to shift their internal narratives, the set of stories that are your baseline for your culture as an American. This is like very Orwellian framing and narrative control. We see a lot of activists, I don't even call them journalists, do this with their articles. We saw it the other day. There was an article about, let's see if we can find it, something about Bitcoin using a swimming pool of energy or something like that for every transaction. Something just totally absurd and out there. I don't know if I can dig it up. They probably hit it down their timeline or deleted it because it got so much negative blowback. Every single post, every single tweet that was mentioned on it was just a negative takedown of what kind of propaganda they were kind of spewing out there. Yes, it's time to be more mindful than ever about our freedoms and about our liberties, and we need to push back on censorship. We need to push back on privacy violations. We need to push back and defend our constitutional rights. And without that, if people don't understand those things, it's a slippery slope, and it's not a good thing. So take some time. Do some research on the Founding Fathers. Do some research on the Constitution. Do some research on why and how our nation was founded, how we fled oppressive taxation without representation, how we never had a state income tax, how the Founding Fathers said, limited government was the goal and government was a necessary evil that needed to be severely constrained. And look at where we are today with, blatant and gross abuses of power by the government, overstepping their boundaries, totally violating amendments, whether it be the Second Amendment, the First Amendment, the Fourth Amendment. They truly believe that those amendments don't apply. They shouldn't apply to them. They're old. They shouldn't exist anymore. We see a lot of politicians sort of acting this way. Was a governor or senator of New Mexico a couple months ago saying that the Second Amendment, she doesn't care about the Second Amendment, right? This is sort of where we're at. The people just don't appreciate why America was founded, and they don't understand their privacy, they don't understand their rights, and they don't understand why those rights are important, right? So do some due diligence, do some research. Guys, thanks for listening today. Stay safe, stay blessed, never stop learning, and keep an open mind.